Joining us now is Toni Sacconaghi, Bernstein senior research analyst. A lot is swirling around, Toni, and I can't rank which concerns have hit the stock or sort of, I don't know, put a bump in the road for Apple's inexorable rise, which we've seen really for decades almost. But I'm worried that there is a bit of a sea change in the future for Apple. Is there, or is it that, once again, demise is being greatly exaggerated?
Good morning, Joe. There are a lot of factors swirling around Apple today, but I do think the core of the business is fundamentally intact. This is a company that has 2 billion devices in its installed base, about 1.2 billion unique users. And they have a capability to develop new products that consumers want to go and try. Now, the Vision Pro is expensive, and it's not going to be a mass market product for several years. But Apple has the brand and cachet that consumers will embrace new products and, equally importantly, embrace new services. And that platform of 1.2 billion users isn't going anywhere, and Apple has the opportunity to leverage that going forward. And so I think if I had to sort of dimension the next 5 years, the last 10 years, Apple's grown earnings at about 12% compounded earnings, revenues about 6%. I think the next 5 years will be more muted. Maybe revenue will grow 4%, earnings will grow 8 or 9, but that's still pretty good particularly for a company Apple size.
In the past, we've seen, and we've pointed out, the legacy tech companies of their era seem to miss out on the next major movement in technology. And now the worry with Apple is maybe that could happen with AI. But does Apple have to lead AI, or can it just use AI to enhance the way it deals with its 2 billion devices that are already out there? It seems like it could be in a more advantageous position than some of the other companies we think about in the past.
So, Joe, you raise a great point that if you look at the leaders in technology every 20 or 30 years, they change, and the risk of platform disruption is real. And I think that's why you see Apple taking steps to try and be a leader in wearables with the watch and with the Vision Pro going forward. I think AI is certainly a really important transition point in technology. I think it'll be one of the most significant forces, both societal and technologically, for the next 20 or 30 years. But I do agree with your assertion that Apple has this powerful installed base, and the question is, can it use AI to add more value to that installed base? And I think it can. We're seeing AI phones launched in the marketplace. Google has some, Samsung has some. We think that Apple will have AI-enabled capabilities in its next phone coming out in September. And so I don't think this is, and obviously the iPhone will allow access to ChatGPT, Copilot, other third-party, AI capabilities. So I don't, at this point, think that Apple necessarily has to be, the leader in generative AI. I think they'll have a lot of AI on their device that will make the device easier to use, and they will be an access point to other generative AI applications.
I mean, I think I don't know what the market cap was in Apple when we said, what's next? What about a car? Well, that's not going to happen now. What about this? What about that? Are they going to buy this? Entertainment, all those things. Somehow they've gone almost, it has gone almost $3 trillion, not quite, but it was close, just on building out services in the ecosystem. And I guess there's no reason to think that can't continue if you do that effectively.
Yeah, I think what Apple has shown with services is, so this is a business that's a little over 20% of revenues. It's been growing double digits. So services alone is adding almost 3 points of growth to Apple every year. And it's a function of a few things. Apple's introducing new services every year, whether they're media services or financial services. They're deepening penetration. It feels like I need more storage for iCloud, seemingly every few months. They're taking price on some of those services. And they're deepening penetration. There are many parts of the world where people still don't have services. So that trifecta of being able to sell services in new parts of the world, raise price, and introduce new services, likely means that business can grow double digits for several more years.
All right. I don't know what, maybe the demise, again, greatly exaggerated, but you did say, that's ratcheting down growth and in revenue and earnings, I guess, Tony, but it's still pretty good nonetheless, and it would still compound on the stock price if the multiple stays the same. Seems like it's not that expensive either. So maybe it is, it's too early to say it's over.
Yeah, look, the last point on valuation, I think, is if we look at Apple's valuation, obviously it's come in. I think the most important metric is what is Apple trading at relative to the market. So the 5-year average is about 1.3 times on a price to forward earnings basis. 6 months ago it was 1.5 times. Now it's 1.3 times. So it's at its average valuation over the last 5 years.